For providing mining solutions with a strong focus on technical excellence and innovation.
Our current innovations are targeted towards making things more autonomous using artificial intelligence. It makes our processes more effective, which results in not only cost savings, but it's a better quality product.
With a current focus on ESG and disclosure standards, many of SRK's clients are planning the end of their project before they even start.
We've got a wealth of knowledge in the ESG space, and we want to push the boundaries of what is a sustainable practice into the next land use.
SRK Consulting, global presence, local expertise.
And representing SRK Consulting, we have Vershinina to talk about ESG trends in the resources industry. To kick us off for this session, would you please make a very welcome, everyone?
Hello, everybody. On behalf of the company SRK Consulting, I today have an exciting opportunity to tell you about the ESG trends and how it works for explorers and developers during 10 minutes. So I had to make my presentation very general, but ready to answer all your questions if you have any after the presentation. So short overview, I will tell very shortly about what is the ESG, what to expect, what are the trends in the ESG conception, why it's very important to start thinking about the ESG aspects on the very early stage of the project development, and what to do with all of that. So ESG, abbreviation for environmental, social, and governance. First of all, it's nothing new. It reflects evolution of the sustainability conception from the environmental movements of 1970s. ESG is based on the Sustainable Development Goals, but sustainability is the broader conception. ESG is the framework which evaluates environmental, social, and governance aspects of a business and help investors to understand the risks associated with those aspects. In other words, ESG is the framework which puts sustainability goals into practice for a business. So ESG addresses the global needs and take them into account while doing a business. And through ESG, business define and measure the impacts on the environment and society. On this slide, you can see the analysis of the top business risks and opportunities for mining industry for 2024. ESG remains the top risk opportunity for the last few years, demonstrating the strong trend. It's interesting that other risks which are directly or indirectly included into the ESG framework are identified as a separate risk and also are among of the top of 10 risks, such as climate change, for example, or social license to operate. And that's all in the forecast for 2024. So ESG is a wider framework, but it includes so many different topics. And so who decide what is included in the ESG and why it's so wide? So the reason for that is that ESG is driven by stakeholders, by business stakeholders. But who are the stakeholders for the mining project? And we are talking about the wider stakeholders, about somebody who can affect the project or can be affected by the project. For mining industry, the wider stakeholders are different groups: investors, local community, employers, downstream manufacturers, we will talk about that later, customers, lenders, and all of them have interest in ESG safeguards and expectations regarding business, environmental, and social aspects. But at the same time, the whole system is very dynamic. So the world is changing, the understanding of the ethic changing. Different natural resources are depleting, biodiversity, water, extreme weather events, intensity increase. And this also changed the expectations of the stakeholders. And all of that bring the mining companies into the challenging situation when they have to navigate among those expectations, trying to understand what should be addressed and what is the best for the project. Of course, everybody would like to order this somehow, and however, different stakeholders have different interests in different ESG aspects. So desire to order cost appearance of numerous ESG standards and guidelines. On this slide, you unfortunately cannot read, because it's quite small. This is the analysis of SRK of key ESG standards, but this table is available on SRK website, and you are welcome to download that. On this slide, in this table, SRK summarized the key standards and grouped that to demonstrate that they are really ranging from overarching general global initiative to very specific documents describing the requirements for the specific commodity or specific ESG topic. And again, all of that developing, updating, and changing all the time. Among numerous guidelines, there are more than 90 which are applicable to mining industry. So this slide looks messy, but it has been done on purpose to show so-called alphabet soup, the heap of the abbreviations, names, the titles of the organizations, standards, guidelines is related to ESG. And that's what we currently have. All those initiatives addresses some stakeholders' expectations we discussed before. It doesn't mean, it's important to note that it doesn't mean that each specific business or project needs to comply with all those requirements. However, it's important to understand the overall picture and be able to navigate among those initiatives to choose what is the best option for a specific project. So, in this situation when everything is changing so quickly, it's very important to understand the trends, where we're going with the ESG aspects. So first, many years trend is the deep integration of the ESG aspects into the all into the business models and process and into the project design. So if early in the 1990s, the key role of the environmental specialist was to get the approval, so now the environmental and social specialists are really integral part of the project design, and we more telling about the integration of the ESG aspects into the overall business model rather than about the environmental management system, how it was some time ago. Another clear trend is a transition from the risk mitigation conception to the value creation conception. It's not enough to mitigate risks anymore. So as a result of the business or project realization, that should be, a value should be created. And this trend we already can see in the regulation. For example, the reform of the Environmental Protection and Biodiversity Act discussed the so-called net positive outcome of the project. So we'll see how it will work, but it's a clear example how the trend already becoming the regulation. Everything related to climate change, very important for the mining projects. Greenhouse gases emissions calculations, reporting, disclosure, but it's only the first step. So it's important to understand what to do with all of that, because the next step is decarbonization strategy and actions to decrease the emissions. Interesting trend which we can see now is that downstream manufacturers started being very careful and interested in their supply chain. For example, car manufacturers initiated due diligence of the metal supply chain. And when they doing this due diligence, they use as a criteria, they use international standards and guidelines, or the internal guidelines, or in some cases, European legislation. And that brings some Australian mining companies into a situation when being a part of the global supply chain, it's already difficult to say that, for example, no environmental regulation is applied to us because we're too far. We are becoming all, part of the global system. Biodiversity, important issues because this biodiversity decreasing dramatically globally. So that's recognized in the new standards, in the legislations. And again, coming back to Australian Biodiversity Act, we can see that more strong requirements coming to regulate this area. So why we should tell about that so early? First of all, because the earlier we start thinking about the environmental and social and governance aspects, the greater opportunity to avoid we have, to avoid any negative impacts and risk and the extra cost we have. It's especially when we're moving to the scoping and feasibility study level of the project development, when we started considering the options, that's the critical moment when a range of the ESG factors needs to be taken into account. This is very good opportunity to demonstrate to investors that company is thinking about their ESG factors, that it's integrated into the business, and this is one of the company day-to-day, business and responsibilities. It's become very important for the investors, and that's one of the factors they are looking at. Learning trends, because as we said, today's trends will become the tomorrow guidelines or regulation. So it's important to understand where we're going to. While project is developing, the trends are becoming, more obvious, and it's better to understand the changes and be prepared. It's cheaper to be proactive rather than reactive. And what is also important is that a lot of ESG information data can be received or collected on the early stage of the project development, on the exploration stage, as a byproduct or free of charge, just with extra recording or something like that, without any extra cost. And also very important to know that very often the first engagement with the local community is happening on this stage. It's even there are a couple of, at least I know a couple of guidelines, international guidelines regarding this engagement with the local community by the exploration companies. So it's recognized internationally as a very important factor. Okay, so what to do with all of that? So first of all, the first step is very important to understand the context of your project. Who are your stakeholders? Direct stakeholders, indirect stakeholders? What is your community? What are their expectations? Do you have any limitations for the land use? Is there any biodiversity sensitive areas around, if it is any native titles or heritage sites around, or any potential issues you should deal with? Then, based on this understanding of the context, identify the key issues and risks relevant to your specific project. And among those risks and project, estimate what is the material for your project. In ESG conception, materiality is really the key definition. So concentrate on what is material, what is the critical for your project. And when you understand that, you will understand what international, national, or industry-specific initiative guidelines or standards applicable for your project and best for your project. And then nothing new based on what you understand as a critical, just go ahead through the action plan and implementing the proper management actions through your business scheme. Thank you very much, and I'm happy to answer your questions.
Thanks so much, Kate. All right, Matsa Resources is next up on stage, an active WA gold and lithium exploration company, advancing some very, goodness me, what has happened here? I know there's heaps happening in the thing, but usually I introduce Poli, the man with the very impressive wardrobe of ties, and there's no tie on Poli today.
It's too hot.
It's too hot.
43 degrees apparently
He's
today.
unleashed. Tell us what's happening with Matsa Resources. Will you please make Paul very welcome, everyone?
Thanks for that, Chrissy. I really appreciate it. Thanks, everybody, for giving you time, and certainly welcome you to my talk. I'm pretty excited about what I'm going to say today, and hopefully I'll get you on board as well. Certainly like to welcome German shareholders and Singaporean shareholders that I know that are watching today, as well as our Thailand team, our management team in Thailand. Matsa Resources, of course, we're ASX listed. Our code is MAT, our disclaimer. The company itself, we've got 478 million shares out on issue. We're shockingly low market cap. Time of the times, I guess, a sign of the times, and we expect to fix that up as soon as we can. Our main claim to fame in Australia, 936,000 ounces of gold at 2.5 grams per tonne. That is within 3 main localities, within 10 kilometres of each other, northeast of Kalgoorlie at our Lake Kerry Gold Project. But I'm not going to dwell a hell of a lot on our gold today. I'm going to really talk about lithium and why, where and how, and why I'm so excited. Picture of our Lake Kerry Gold Project. As you can see, the lake there. West Australians will be very familiar with a dry lake. Non-West Australians won't be, but that's what it looks like. Our gold, as I said, 936,000 ounces, 2.5 grams per tonne. So our regional setting, in total, we've got 449 square kilometres. We can increase our exploration or our gold resources by exploration. Since 2020, we've increased it by about 213%. But what is Lake Kerry? Lake Kerry is a substantial, exciting gold project. It has 3 gold mines. 2 are fully approved, ready to go mining today. 1 is Devon Pit Gold Mine. We expect that to be approved for mining in July. That is a key to our funding. We've got a world-class exploration target in Fortitude North, which we plan to go ahead and commence drilling very soon, and a pipeline of other quality gold projects. We think that the Lake Kerry Gold Project more than justifies our market cap. In fact, in my opinion, 3-fold. So we've just got to keep pushing that. The trick is for us to get value out of Lake Kerry, get Devon into production, bank the potential profit or cash flow if you like. We expect over a 14 to 16 month mine life to make potentially $37 million net cash with a total OPEX and CAPEX of approximately $13 million. We think that can go up with today's gold price, and we think we can increase that with further results. These are results we produced Tuesday. We released Tuesday. They are damn good results for an open pit mine. I'm sure you'll agree. Fortitude Gold Mine, ready to go mining tomorrow. This will make easily $100 million plus today's gold price, considerably north of that. I'm rushing it, guys. I want to get to the lithium. Red October, plenty to talk about there if we choose to. Fortitude North, 1.7 kilometre long mineralised zone. We've had massive hits here last year. As you can see, 3 metres at 12 grams, 20 metres at 3.8, 35 metres at 3 grams. Not bad for an open pit gold mine. We will be drilling here in the first half of this year. We had a very quiet year last year for various reasons. You watch us, we're going to bounce back. Some of our results that we produced that I've already spoken about. A lot of mergers and acquisitions happening in our region. And in fact, recently, You'll note that Dacian bought Kin Mining. They paid, some of their assets, they paid $88 an ounce. We have 932,000 ounces. That gives us a valuation of circa $70 million. You can do the mathematics. That's what we're going to do at Lake Kerry. Please have a look at this presentation when it comes up in a week or so. After a very quiet 2023, Matsa is ready to rumble. We're going to start by getting Devon Pit Gold Mine into production. We might do some more drilling. We're discussing with ore treatment options today. We are finalising permits today. We're funding options are being sorted as we speak. We're speaking to 3 mining contractors. We're speaking to 2 potential purchasing options. There's a lot going on. We're flat out. We're going to drill at Fortitude North. We're going to look at drill at BE1. We're going to take feasibility and resource drilling at Hill East and Olympic. You don't get busier than what we are for a small company. Thailand lithium. It's really, really exciting. This is at our Kanchanaburi project. These are pegmatites outcropping. We see this for several hundred metres, but the overall strike length of this single project is up to 7 kilometres long. We're seeing outcropping, we're seeing a lot of float. This has the potential of being quite sizable. Swarms of pegmatites, so it's not all 7 kilometres long, it'll come out. But what's really interesting, why Thailand? Well, we've been there for 10 years. We know Thailand like very few other foreign miners. Of course, apart from Kingsgate, Pan Asia, those guys. But we're in the top 5, I would suggest here. But what really has our imagination, the Thai government is beside themselves with what they want to do. Thailand, in 2022, was the 10th largest motor vehicle producing company in the world. It produced 1.883 million vehicles in 2022. This was as produced by the International Motor Vehicles Association in France. 10th largest in the world. They have grown since 2023. I suspect they're probably the 7th largest motor vehicle producer in the world. The Thai government has said they want electric vehicles. Isuzu have turned around and said all of their electric vehicles, pickup vehicles, are going to come out of Thailand. Mitsubishi has said the same thing. Mercedes-Benz has said the same thing. So this is real. These articles are published in the national newspapers in Bangkok. You know what? They talk about Matsa being one of the 2 leading contenders for lithium mining in Thailand. We are dealing with the government who are saying, we need you to go ahead. What do you want? What can we help you with? Mining in lithium in Thailand will happen. We've got the articles here to prove it. Happy to show you if you like. We have spent 2 years amassing a brilliant pipeline or portfolio of tenements. 600 kilometres from our Hidden Panther, Rose Panther mineralised zones all the way up to Chokdi Panther, where we're still accumulating tenements. I've got some photos. Absolutely exciting. We've got 1,709 square kilometres of special prospect licence and exploration prospect licence applications that come from 116 individual applications. We said we had a quiet 2023. Wrong. We were flat out in Thailand. Our geos out there, Kun Gloy, Kun Glem, Kun Tontam, our managing director in Thailand, Kun Ratha, our admin, Kun Lek, have done a fantastic job in consultation, of course, and work with myself and Pascal Blampane, other director of Matsa. I was there last week. We spend a lot of time working there. Excellent long-term relationship with the government. I met them last week when I was there. It is pro-mining. But what have we really got there? We've now got 7 mineralised zones that we have discovered. Each mineralised zone is substantial, in my opinion. That could be a substantial individual mine, assuming the drilling and everything comes through. These are some photos. You will see that for many years. This is a road. The tyres were using this as a road. Pegmatites are very hard. We went there and we were amazed. We chipped some rocks off and it's consistent with lepidolite, with lithium. 3%, 3.5%. We could not believe our fortune. But what's really, really interesting, it's about 20 metres wide, 160 metres long, and the balance is undercover. That does not mean that the pegmatite doesn't go. All of this means is they haven't taken the top cover off, the topsoil. And topsoil is only about 1 metre and 1.5 metres thick. You just don't get any better. So, what do we have there? Well, we kept on looking. This is another prospect. This is, I'm not really sure to be honest with you, probably 10 kilometres away from one of our other prospects. That whole hill, which is potentially 100 metres high, 400 or 500 metres across, 300 metres deep, is consistently littered with this pegmatite. They're not swarms, it's the whole thing. And it's consistent with lepidolite. How deep is it? Don't know. We'll tell you when we drill it. But Jesus, it looks good. You can just see the size of the outcropping. This is not just little pegmatites on the ground. This is serious. So, is our lithium any good? That's the next question you've got to ask. Do you have lithium? Absolute big tick. Is our lithium any good? Well, what we did is we grabbed our lithium, we packed it into suitcases, and I said here, this time last year, that we were going to go to China and prove if our lithium was any good. Is it processable? Is it of grade? A lot of Aussies are telling me it's worthless. Well, we did exactly what we said we were going to do. Pascal and I went to China, 100 kilos of rocks in 4 areas, pink panther, rose panther, black panther, and spotted panther. We put them through the processing facility, not a desktop laboratory, the processing facility. Results we got amazed us. As a raw DSO product, 2 of our areas produced 1.65% and 2.44% lithium, Li2O, lithium oxide. This is far better than a lot of the stuff that I've seen in Australia or elsewhere in the world. So they ground it to, I think, 2 millimetres. They put it through a flotation circuit. They ground it and crushed it, put it through a flotation circuit, which we saw. That's the concentrate that came out. 4%, 5.91%. We're amazed. They were amazed. This is Yongxing Special Materials in Yangtze Province, which mine only lepidolite. Now, what really blew us away, that's the recovery from the concentrate or from the DSO that you will get if you convert that to lithium carbonate in the high 90s. Now, I challenge anyone that's producing spodumene in Australia to be able to say that that's not good. No acid is used in this process. It is roasting technology that's been perfected by the Chinese now over 3 years. This is unequivocal, unarguable. What it proves, Thailand lithium has got no deleterious elements. It is readily and easily processable, comparable cost to spodumene, and the recoveries are brilliant. What is really interesting, the lithium carbonate that lepidolite produces is 0.3% better than the benchmark used for spodumene. Tell me where I'm wrong. I don't understand it. Government backs it. The ore is of quality. It appears we've got area. So what do we now need to do? Drill it. Now, for the naysayers, guys, we got tenements granted a couple of months ago. We're getting more tenements granted. We think in about 8 weeks, 12 weeks. As soon as we get those other tenements, we're going drilling. We're going to go drilling in that area that I showed you the photos of. You can't lie about assay results. What is it that I want to say? There's a new dawn for mining in Thailand, and I think Matsa is it. What is really interesting, the Thai government have said they're going to spend $1 billion US to prepare processing facilities and battery manufacturing plants so that they can feed batteries into their motor vehicle industry. Where are they going to get their lepidolite from? Matsa. That's what we're saying. And you know what the kicker is? If you build a lepidolite processing facility, you cannot process spodumene. If you build a spodumene processing facility, you cannot process lepidolite. So if the government commits for this, we've got a sole market in Thailand. It gets difficult to beat that, in my opinion. So am I committed in Thailand? Absolutely. Is our team committed in Thailand? Absolutely. Watch our results, guys. We're going to deliver. Won't be easy, but we will do it. We've got 6 drill-ready targets. 2, one's already got exploration license permitted. You don't need, once you've got a license permitted, there's no POWs or anything like that. Automatic, you run into it. We've got a second one that we're hoping within the next 3 months, and that'll continue consistently. Guys, if you think I'm pumped about Matsa, you're dead right. Thank you.
You're a pro, Mr. Poli, an absolute pro. It's 41 degrees outside at the moment. 1991, we had our hottest day here was 46.1 degrees.
But I'm feeling pretty cool at the moment.
You're looking cool, dude. You're looking cool. I don't know, there's a couple of blokes up the back there. They've got some dodgy shorts and slides on, so at least you're keeping the level of decorum up. Oh, and this fellow is as well. And where you got your team is at the moment in the, is it the Athabasca Basin?
Yeah, it is. We've got guys on the ground in the Athabasca, so very different to Perth.
Yeah,
it's about minus 30 at the moment.
That's,
so.
I just looked up the temperature and thought, I don't know which one is worse, actually, here or there. So you've actually got a whole team there, boots on the ground, round number 2 of drilling, correct?
That's right. And I'm finishing here, going home for a night, and then off over to the Athabasca to join the drilling. So pretty exciting.
All right, let's introduce this fellow to you. This voice up the front, he belongs to Peter Moorhouse. Peter is the Managing Director of Basin Energy. Please make him welcome to tell their story.
Brilliant. Thank you very much for the intro. It's my first RIU Explorers Conference. It's absolutely stoked to be here. And look, it's pretty exciting to be one of just 3 or 4 companies telling you a little bit about uranium. I'd hazard a bet that in 12 months' time, those optics might be somewhat different. I'd hazard a bet we're going to see a few companies coming to you with uranium projects, and there's some pretty solid fundamental reasons for that. You know, I'm sure you've seen the excitement. We've all seen the spot price for uranium moving over the last few months. We're now happily sitting above $100 per pound, which is the highest in many, many years. But there's a reason for this. We've got a global push to provide clean baseload power. And there's a push to turn this, to have nuclear as a key component of this. Look at the last COP meeting where over 20 countries committed to tripling nuclear power before 2050. This is pretty phenomenal statistics. We're coming off the back of over a decade of underinvestment. There's been very little money spent on uranium exploration. Very few new projects, bar a couple of very good ones, which we'll touch on in a moment. But it leaves you with a sector that's absolutely primed for quality uranium deposits in good jurisdictions. This is an Explorers Conference. The Basin story is an Explorer story, so I'll run you through where we're at today. A disclaimer, feel free to drop around the booth and we can run through that. So Basin Energy, ticker code BSN. We've been listed about 18 months, and we're listed specifically with the people and the assets for a uranium pure play company. We're well funded. At the end of last quarter, we had 3.4 million in the bank. We've subsequently done a raise, so we've just got over $6 million. And as mentioned, we're active on the ground exploring. We've got drill rigs turning, or a drill rig turning currently. We've got ground geophysics crews going, and life's busy at the moment. We're going to talk a bit about the credentials of the Athabasca Basin, but for those of you who aren't familiar with this, this is a jurisdiction in northern Saskatchewan, which is central Canada. It is the home to uranium mining for many, many years. It's been constantly producing uranium for over 65 years. It's been a top 3 producer of uranium for 45 of those. It's the headquarters to the likes of Cameco. The likes of Orano have operating plants there, and many of the major and mid-tier companies have operations in this part of the world. And with that brings a stability. It gives you a jurisdiction which understands the process and understands how uranium mining works and brings an acceptance. So there is a pathway both for exploration, through project development, and through to production. It also provides potential for partners as you move a project like ours forward. Basin currently sits with a market cap of sub $20 million, fully funded, on the ground, in the world's best part for uranium. Okay, here's the Athabasca Basin, or a map of it. You see our two main project areas. So they're the Geeky project, which I'm going to talk to you mostly about, and our North Millennium and Marshall projects. Now, why has this been part of the world been so good for uranium mining over the generations? And there's a very simple reason. Now, it's not all about grade in any mining operation. It's not all about size, but God, it helps. I like to compare the uranium deposits of the Athabasca to Australia. The prime example being Jabiluka, a part of the world which I'm very fond of, an amazing deposit of some 350 million-ish pounds of uranium, sitting at about 0.4, 0.5%. So that's really the anchor for Northern Australian uranium. It's been the benchmark. In the Athabasca, the biggest known deposit at the moment is the McArthur River deposit. It's about 675 million pounds, so almost double the metal, but sitting at 17%. So that's 0.5% compared to 17%. Now, this part of the world is an absolute phenomenal area for endowment. Yes, that's the biggest, but it's not a freak. We have a series of other significantly high-grade, large tonnage deposits. The Athabasca Basin, tell me around the world, so a lot of you do know me, and I am a bit of a uranium tragic. I've been pushing this for almost 20 years now in exploration for uranium. Where in the world has produced shareholder returns post-Fukushima in uranium exploration? It's not a lot of places, and the reality is it's the Athabasca. So if you think about when Fukushima happened in 2011, post then we've still had some phenomenal discoveries in this part of the world, and returned phenomenal shareholder value. The main one I'm going to discuss is NextGen, is Arrow. So Arrow went over, a couple of Australian guys from a TSX listed vehicle. They were exploring for a bit of a different mineralization style. They discovered the Arrow deposit after Fukushima when uranium was sitting around $30 per pound. They had a market cap of $30 million, and off that exploration success, they're now a plus $5 billion company off the back of exploration success. So you're here because you like exploration. As far as I'm concerned, there's no better commodity to be looking at, and Basin is set with exploration targets with the upsides if this is what you're playing for. There's been other successes, the likes of 92 Energy, who many of you will be aware of, Perth-based company, had some great success recently, announced a merger with Arthur Energy, Baseload as well, and our joint venture partners, all kicking out grade in a sector which has been seriously neglected in this part of the world. Now, quick geology lesson. I am a geologist after all. This is a cross-section of the Athabasca Basin, or a stylistic one, I should say. We've got younger sandstones sitting in the lighter greys, and we've got older basement rocks sitting underneath. So younger and older. And the traditional model has always been unconformity, drill to the unconformity, test it, drill a bit past it. If you're not hitting grade, move away. And why would you change that model? Because there's been some phenomenal successes that I've just shown you through that timeline. Now, it's fair to say the guys that went into NextGen went with a bit of a different target strategy and said, well, we think there's some similarities with Northern Australia, and perhaps there's host. If you have the right structure and the right rock type, you don't need this contact. Long story short, Arrow was found, and that has some significant implications for a junior exploration company. If you go over to the Athabasca with a $10, $15, $20 million market cap company, you want to make sure that you can actually explore this properly. This success, the same rock types and structures that host this are actually sitting on the eastern flank of the basin where you do not have sandstone cover. Why is this important to us? Because you're not drilling deep holes, you're now drilling shallow holes. So just as prospective ground, it's previously overlooked because the model has changed, but within the top couple of 100 meters of surface. Now, this proof of concept, well, this is a theory, but this is a proof of concept which is really starting to fall together in the Athabasca, and there's a lot of work being spent on it. And the work that 92E have done has started to prove this as well. So that leads us to our Geeky project. We picked up this ground, which we see as prospective for that style of mineralization. There's very little work done on it, so we went out, this is 18 months ago, and said, right, structure, let's go do magnetics. Rock types, let's go do EM. There's a 20-meter cover of glacials over the top of this, so you can't just walk up and map much of it. And then we got some guys on the ground to do some boulder sampling and started to pick the geology story together. We went and did a first pass drill program. We put in 8 drill holes, and From an exploration play in a greenfields area, we were extremely excited about what we saw. First of all, I said, key ingredient, structure. We hit structure. We hit big structures, 30, 40 meters of brecciation, full of hydrothermal alteration. We saw pathfinder elements, so anomalous metals which go around with uranium-bearing fluids, and radiogenic leads associated in these structures. So the fluids that have gone through them were carrying, it's fair to say, uranium-fertile fluids. And we did find anomalous uranium. We didn't hit it all grade, but we got 0.5 meter at just over 0.25% U3O8, plus some thicker intervals of several hundred ppm. So proof again that this system's fertile and it's active. To say we're excited about this was probably an understatement, but we're still not really seeing the traction or the excitement for the junior space for uranium exploration at the time. We stopped and looked at the alteration patterns and said, right, where else is this seen in the Athabasca? And there are a few similarities. And one of the exploration techniques that has worked in those similarities is using gravity. So gravity to map where your most intensive alteration patterns are happening. So what we did, we said, right, we know what faults we're chasing. We've seen that in drill core. We know they're fertile. Let's go fly a gravity survey to try and de-risk this to move it forward. We did that, and we picked out a series of significantly strong gravity anomalies running parallel to those key structures. Now, that brings us today. We've integrated that data. We've got this world-class set of geophysics. We've done EM, we've done magnetics, we've done radiometrics, we've done gravity and first-pass drilling. We've identified a mineralization system here. We have a series of targets, and now we are working our way through drilling those right now. And we've got a couple of thousand meters minimum planned. There's 8 to 10 drill holes. We haven't finished our first hole yet. We only literally started in the last 24 hours or so, but this is going to keep us pretty busy for the next 8 weeks or so. We're testing pretty close to a couple of the last sets of drill holes. Having seen the observations in the core, we're excited about the close proximity. And we're also doing a couple of regional targets there as well. This is a big project area. And just one thing to sort of outline there, if I can just go back. If we look at the scale of this is 330 square Ks project area. These are the footprints to scale of some of those major deposits. So de-risking, doing the proper geology first before throwing lots of drill holes in is critical. And we're happy we've got to that point now. I'll briefly talk to you about our North Millennium and Marshall projects. So this is tracing the more traditional contact type, the unconformity type. A little bit deeper, so we're talking 700 meters target depth. And I'll focus on North Millennium. So Millennium is a deposit majority owned by Cameco, just over 100 million pounds at just shy of 4% uranium. So a significant project. This is hosted in a north-south fault, which is shown running through here stylistically. And we see it in geophysics as a conductor sitting northeast, which represents basement lithology, being chopped up by that north-south fault. Step out of the fault, you lose the grade. Head just to the north, there was a little bit of regional drilling done, and they hit pathfinder metals. They hit the metals I just talked about at Geeky, the things that show that this fault is probably still carrying that uranium. 7 Ks to the north, and we've got our project area. We have our next regional conductor floating through here, and we know that the fault continues there. Now, from a proximity play, you know you're in a fault that's hosting a major uranium deposit, and you know you're seeing a similar geophysical response. It's a pretty tantalizing prospect. Add a little bit of weight to that. Cameco, it's just dropped off this mat, I apologize, but there's a red dot here, have just drilled 9 meters at 2.4% in that rock unit, which is floating through here, which is, again, evidence that that rock type is suitable for hosting mineralization. So what are we doing? We've got the guys out now doing some high-resolution ground electromagnetics. Now, the purpose of this is, I don't want to go scattergun approach with drilling. Let's de-risk this as far as possible. So we're refining that drill target as far as we can take it. And assuming that those results come back pretty positive, over the next few months, couple of months, we'll aim to start drilling that. So post what we call the melt season, early summer in the Athabasca Basin. Very briefly, we do separate our North Millennium and Marshall projects. So Marshall is just next door, just adjacent to the North Millennium project. A large geophysical target, one that we're also doing some EM on. At this stage, I'm a geologist who's worked in uranium in these types of deposits for a long time, and I can't tell you what it is because it's an anomaly and it's a big feature. Let's try and refine that further and see where we can take it. Very briefly on the key team, Blake Steele's our chair. So Blake is a non-exec chairman. He was formerly the CEO of Azaga. So Azaga are an ISR US uranium company. He worked through a series of mergers and acquisitions to build up that company during the last downturn, and back in 2022 sold them out for $220 million. Phenomenal address book, very well known in the uranium space in North America, but a corporate background, so complements me. I'm a uranium geologist. I've worked for various deposits around Australia and around Southern Africa and a bit in the States on many different deposit styles as well. So between the two of us, quite a formidable address book, and with not a lot of projects we haven't seen. And then the other key player is Odile Maufray. Odile leads our exploration projects. She was formerly the project lead for Orano, so Orano being the French utility, specifically brings to us that Athabasca Basin knowledge, operational skills, and knows what she's looking for. Pretty excited. If you guys haven't already got exposure to the uranium space, I encourage you to go and have a look. Go and look at that macro, go and look at those thematic, see why we're all getting excited. If you're interested in exploration, you look for places with massive reward, and I think that's what you've got looking in this part of the world. Incredible work, great story, great team. Thanks for listening, guys. I hope you can drop around the booth and say hello.
Well done, Peter Moorhouse. Thank you. All right, from one Peter to another Peter. This is Peter Harold, back in the thick of it. Monday was his first day back at work, or his first day at the new job. How are you feeling?
Feeling good. Good.
You've had 3 months off.
What's that?
You've had 3 months off,
I have
believe.
had 3.5 months off. Yes.
Yeah,
Yes.
and he's back. He's back now to zinc. So he started his career in zinc, and he's back now in zinc, and he's got his reasons for being excited about it, which I'm sure he's going to share with you all in a moment. I wanted to do a dad joke and say you're ready to rumble, but I won't.
Everybody else does. So
I know.
even Paul Poli said ready to rumble.
I know. Would you please welcome Peter Harold, the new MD and CEO of Rumble Resources.
Yeah, so I'm certainly, after 3.5 months sabbatical, I've got about 4 things off the 7-page to-do list done. So I did get a few things done for my wife, but I'm really ready to go, and I'm certainly ready to rumble. The disclaimer, and we'll move straight into the story. So look, the main project we have is Irahidi, and I'll talk a lot about that today. It's a big project, which is what attracted me to the story. I mean, my history in zinc goes back to my grandfather, in fact, Mr. Allnut, my mother's father, who worked at EZ in Tasmania all of his career. And we used to go on holidays down there, and we would drive down. And in those days, you could drive through the smelter, and he would point out, he was electrical engineer, the things that he designed. And the other thing that he did is when they finished with the filter cloths, they would sell them off. And a lot of people had them for paint drop sort of filters, and I've still got one of those. So every time I look at it, I think of my grandfather, I think of zinc. So it's in my blood almost. And then my first job in base metals was in zinc, Golden Grove project. So I was involved in the startup of that. I was the marketing manager at 26 years of age, so it's a long time ago. But we went all over the world selling zinc to the Germans, the Koreans, the Japanese smelter pool. And in those days, it was a very small market, and it's grown, to an 11 million tonne market. It's an enormous market and growing compounded about 5% per annum. So I've always been interested in zinc. I disappeared into nickel for a while, but I've certainly come back with a vengeance. And I think the thing that attracted me to the company was the board, but also the project as well. And you've got 2.5 or 2 million tonnes of zinc. If you can get this project into production, this is a multi-decade project. This is not a small, short life, high cost operation. It's a complete opposite. The metallurgy results are good. The project's got a lot of optionality. There's nearly a 500 million tonne potentially resource at sort of a 0.5% cutoff. So if you can do something with upgrading the ore, then you've really got a massive amount of zinc that can come out of the system. And there's enormous amount of exploration potential here. Only 30% of the strike has been explored so far. Let's talk a lot about zinc. I think it's a bit of an unloved metal. Everyone's talking about lithium and gold, and probably not talking about much nickel at the moment, but certainly zinc. It's been around for a long time. It's the 4th most used metal in the world, which is staggering, behind iron ore, aluminium and copper. As I said, it's about 11 million tonne market, growing at 5% per annum compound. And it's one of those things that's a bit boring, but everyone sees it every day. Your motor car is galvanising, protected from rust. Roofing, and it's just everywhere around the world, people need galvanising. So 60% of the world's zinc goes into making galvanising. You've also got all the alloys. I mean, people forget that brass is an alloy of zinc and copper, you've got bronze, which was zinc and tin, and obviously now there's a growing need for it in the sort of the EV space as well, and also in energy storage as well. So we'll talk about. So it's really a future-facing metal underpinned by galvanizing, but with a growing market as we go into the low carbon economy. So I didn't realise this, but huge amount of galvanizing, obviously, for the offshore wind farms, and everyone's building those. Never seem to be stopping. Obviously, solar panels are coated as well. And then there's also the zinc ion battery too, which is a lot safer than the lithium ion battery. So obviously there's a demand for that as well. So enormous amount of potential there as well, underpinning that already very strong market with galvanizing. And you can see how that has grown very significantly in that renewable space, but underpinned again by this galvanizing, which is just growing exponentially. And this is what really attracted me to zinc. And it's the reason why I guess I moved over commodities after a long time in nickel was because in nickel, we've all seen this Indonesian situation. The Indonesians 10, 15 years ago didn't produce any nickel at all much. They did a bit of exporting of ore. The government put this ban in place. The ore wasn't allowed to be exported. There's been $14 billion invested in the country, and now they produce half the world's nickel, and they're flooding the world with obviously cheap, obviously not ESG friendly material, but certainly the Chinese are lapping it up, and hence we've got a very low price. We don't have that supply-demand issue with zinc. And in fact, it's the opposite. There's no Indonesia that's going to come roaring out and produce, half the world's production of zinc in the next 5 to 10 years. It's complete opposite. In fact, if you look at this slide, you can see there's a big gap between what looks like the demand forecast and supply. Probably one of the best supply-demand sort of imbalances that I've seen in any commodity. And that's what's really got me excited about zinc and about Rumble. And you've got something like half the world's largest mines potentially closing in the next 5 to 10 years, running out of ore. And as we know, it gets harder to develop projects. It doesn't matter where you are in the world, getting it permitted, getting it approved, getting it built, cost time is really rapidly increasing. So that's what I really like about zinc. And I think that slide probably more than anything got me really excited again in zinc, even though I'd always had an eye on it. And one of the things that I wanted to do if I was going to jump commodities was get into a large project. So getting back to Irahidi, this is a big system. It's well located up near Wiluna, so we could access out through Geraldton with concentrate or up to Port Hedland in that area, all good infrastructure. The discovery was in April 21, and within 24 months, the guys, fantastic team of geologists, had actually put the maiden resource out, then as we know, it's a very zinc dominant, but there is lead and silver as well. And it's one of the largest zinc discoveries in the world in recent times. And again, that's another thing that's just quite unique. And as I said, it's well located. It's a globally significant resource. I won't go through the details there. It's on the slide, but it's there, and depending on what cutoff you use, obviously the lower the cutoff, the more tons you have. There's enormous potential here. This was a greenfields discovery, so it's not an old mine that's been brought back into production. It's a completely new area, and these projects, and when you look at what we've got there with Chinook and Tonka and some of the other projects, we've just got this huge strike, and the geologists are just going to be pestering me all the time, and they have done with previous management for money, so that they can drill all these targets, infill, and work out what we've really got here. I keep talking about world-class, and I think that's what investors look for. They look for world-class projects, and this is potential. When you start talking about kilometres of strike, I mean, I'm used to Savannah, which was 250 metres long and 50 metres wide. I mean, these are, and that was a very, good ore body in terms of contained nickel, but you're talking about kilometres here, and this is where the potential for low-cost mining, this is only very shallow, 150 to 200 metres deep. So again, open pittable versus underground. This is just so much easier than some of the other projects I've been involved in. We can optimise the open pit. We haven't done a lot of work on this yet. The drilling's only really just been finished last year and put the resource out late 23. So, we've got a lot more work to do. And obviously, financially, everyone's holding onto their cash at the moment. We're doing the same. We've cut back on the spend, and we've reduced the overhead. We've let a few people go, unfortunately, but hopefully we can pick those people up again when things pick up. Tonka and Navajo, 11 kilometres by 2 kilometres. I mean, this is the unconformity, which actually hosts the mineralisation. Open, along strike and down dip. And that's what you'll see in all of these slides, and I won't go through them all, but it's always about potential. We've only drilled a small portion of it, and there's potentially a lot more material. So fantastic grades, and you can just see here all those arrows, open, 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 open. That's what I love, you know, it just keeps going, keeps going. It's flat lying, as I mentioned before, that's open pit potential. So these are all really important factors when you're developing projects now. And what we're seeing, and certainly that I saw in nickel a lot, you know, some of the holes we were drilling 800-900 metres. Someone said to me once, I was sitting in Allendale Square on the 22nd floor in an office, and they said, to hit the ore body we're trying to hit, you've got to drill across to the Narrows, and you've got to hit a motor car driving across there. That was kind of the target. So we don't have the same sort of issues here. And obviously the mineralisation is much more contiguous. I'm an industrial chemist by training, so geology is really, you know, that sort of something that someone else looks after, and we've got some very, very experienced geologists in our team. I'm much more interested in the sort of marketing, because it's all very well and good to find something in base metals. You've got to be able to sell it to someone. So that involves getting it out of the ground at a reasonable cost, and then actually having the recoveries. And so many projects fall over with the recovery, low recoveries, or they produce a concentrate which has got some deleterious elements in it. So if you look at that, we get high recoveries, you know, over 90% of the zinc, and that's the key component. It's a coarse grind, so that's really important, as most people know, for CapEx in terms of milling and OpEx. Very, very important. Fast float, so again, smaller, potentially smaller plant size, and all about sort of optimising and reducing that capital and operating cost. And you produce a sort of close to 60%, so which is pretty much a standard. 58% con is sort of the standard. So 59 to 60 is getting up there. It's certainly positive. And I also mentioned there are no deleterious elements, and that's really important because, you know, I spent a lot of time selling zinc and then selling nickel concentrate, and there's a lot of material that actually gets a discount or actually can't be sold because it's got high arsenic, high cadmium, high mercury, something that causes a problem in the smelting process. So, you know, high MGO, for instance. I mean, none of those issues we have with this material. So we're very, very lucky. So it's a big system. The grade is good, and we've got those high recoveries and no deleterious elements. So that's a really, really positive for this project going forward. One of the other things that's going to be really critical to this project is, obviously we've got, you know, the grades are sort of what I would call medium grade. They're not high grade in terms of the global resource. Can we beneficiate this material? And this is becoming more and more of a thing, whether it's the dense media separation, which has been around for a long time, or ore sorting. And a lot of projects now only work because of the ore sorting. And we've undertaken quite a large exploration program to get a bulk sample of just under 2 tonnes, which has gone off to the laboratories now. And we're doing a lot of work on DMS and optimisation of the flow sheet around the recoveries. But if the DMS works, you know, there could be potentially somewhere between a 2 and a 5% upgrade, or 5 times upgrade, not percent, sorry, times. And that obviously has a massive implication in terms of you mine X tonnes and you're only putting through a factor much smaller. So that means the plant's smaller, and obviously the process, to the cost of building it and the operating cost is far lower. So we're really hoping like crazy that the DMS works and that we can get an upgrade of somewhere which is you know, similar to some of those other projects that are listed there. Somewhere between 2 and 5 times would be fantastic. And look, this slide just really says a lot of people are doing it. Dense media separation has been around for a long time. It's a very well-known process, and basically, obviously, you're rejecting the material that doesn't have the metals that you want in it, and that obviously, as I said, reduces the amount of material that's got to go through the milling part, and obviously the flotation, and then through the concentrate dyeing, and then selling the concentrate. We've had some recent exploration success on some of the potential extensions, and we put out some results before Christmas, and we'll have some more results coming out soon about Mato. So again, could be another very, very big system, and we just don't know how big this is yet, but it's open in every direction. Again, open pittable, which would be fantastic, and there arrows everywhere, open, 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 open. So that's again really exciting for us. And what we have also done over this period of time, is we actually increase our holdings. Hirahiti is a JV, we're 75% an operator. We obviously have picked up a lot of other ground around, and that's mostly 100%. So we've got the leverage there as well. We do have some other projects, and I certainly won't go into them today, but obviously there are things like gold at Western Queen, lithium and copper as well, and we're in joint venture with some of those. Some of them we own 100%. Given it's gold, and we've got a resource there, quite a large one, 160,000 ounces in an old open pit and underground project, Western Queen. We've had a lot of interest from gold companies, as you could imagine. The lithium, we've had a lot of interest in as well. So, you know, we are entertaining discussions with those parties about what we do with those assets, because our fundamental focus is on this big world-class deposit at Irahidi. Sustainability, is that a duck or is it? Sure what that is. Okay. Was that a question or was it? I couldn't quite understand it, but come to the booth afterwards and ask it to me again. We do everything as well as we can. You know, we're very sustainable in terms of the way we operate. We've got a very good relationship with the TOs, and we've got a full-time manager in that regard, Will, who's done a great job. I haven't been up to site yet. I'm heading up with the guys in a couple of weeks. I'm really looking forward to meeting the team. But the previous management and the board are very active in dealing with the locals. Quick corporate overview. You know, the team is an experienced team, a lot of ex-Resolute guys, Peter and Jeff, Mike, obviously Matthew Banks, everyone knows Matthew's been very successful in a lot of different commodities. Brett Keeler, who's obviously ex-IGO, and before that with Peter, I think at Samantha or Resolute as well. Ben, Luke and Trevor as well, rounding out a really good team. And we've got coverage by Sam at Wilson's as well. So what are the catalysts for the re-rate? Well, obviously one is the continued drilling, and we are going to keep drilling, and we're going to target those higher grade feeder zones and those extensions. That flotation test work is really key, and whether the DMS works, that's going to be really important. Then we'll obviously move into a scoping study, whether we monetize one of our core assets or not. A commodity price bounce would be really nice, and some of our small caps feeling the love are going to be fantastic. And last slide, we've got a lot of zinc. The fundamentals look fantastic. Small caps are super cheap, as we know. You've got to buy Rumble.
Okay, just a reminder to everyone, stick your phones on silent. Your sound down, sound down. All right, this fella here, walking up on stage this year, how old do you reckon he is? No, 20, no. He is the same age as Western Australia's #1 nickel producing area, which of course is Kambalda. So Kambalda turns 58 this year, and so does this fellow here, and there's a link because he is in charge of Lunnon Metals, who of course are nickel focused. And he said to me this morning, there's still a lot of upside there. I'm going to tell you why. There is a lot. It's not all doom and gloom, you know. So he's going to tell us his take on it and why you should be investing in Lunnon Metals. Would you please make him very welcome, everyone?
Thanks, Chrissy. Welcome to another interesting day in the nickel business with the news this morning of BHP. I'll touch on that later on in the presentation. I've titled this "Grade is King." We think it's a great proxy for what sets Lunnon Metals apart, sets its assets apart, sets our portfolio apart, sets Kambalda apart from its peers. That's why we think it's not all doom and gloom. Hopefully you'll agree with me in 10 minutes or so. This is our dashboard. These are all characteristics, again, that we think sets us apart. Without a doubt, the value of the company is underpinned by our location in Kambalda. It is Australia's most prolific nickel belt. It is a premium location. It has an amazing discovery record. We'll touch on that in a moment. We have plenty of cash we raised last year before these recent headwinds that the nickel sector has faced. As at December 31, we had $27 million, so we can maintain our discovery effort. Obviously, it's prudent to trim the sales a little bit there and maybe just cut the expenditure, which we're looking at doing currently. We've grown our resource base now significantly. It's over 109,000 tonnes of nickel metal in the ground. It's because it's in Kambalda. It is high grade. Kambalda is renowned for its high grade nickel. It's renowned for producing a premium product, a premium concentrate that's highly sought after. That grade, that premium product mean our assets have great resilient project economics, which will stand us in good stead in these difficult times. And I mentioned Kambalda has this amazing discovery record. We've made a discovery, it's Baker. I'll take you through that in a minute. It also has some quite unique characteristics that set Baker apart from other assets in the nickel space. Foremost, it's a very short lead time to production. It's got a very low production, pre-production capital cost. That offers great flexibility for us and our shareholders to maintain leverage and optionality when this nickel sentiment turns around. So look, the elephant in the room is nickel price, apparently. I put this chart together just to highlight we don't think it's necessarily nickel price, it's very much the sentiment around the nickel price. When we listed back in June 2021, as this chart shows, the nickel price in Aussie and US dollars was pretty well the same as it is now. Nickel has been a lot lower before. It's obviously, people call it fickle nickel. It's a very cyclical metal. But back in June 2021, we listed with 39,000 nickel tons. Since that time, we've found 70,000 nickel tons at 2.7%. We've done a deal with our major shareholder, Goldfields, to acquire 2 more nickel mines, to have 4 historical nickel mines in Kambalda. We've pretty well finished the mining proposal for Baker. That's in with the department. We've completed a PFS and declared first ore reserves at Baker. So we've done a lot, we've achieved a lot. But with the close yesterday, and I haven't looked today, but no doubt we'll be down again today with BHP's news. Yesterday, the market was telling us that our enterprise value last night was less than it was when we listed. It was $28 million when we listed, and last night it was just a tick under at $27.5 million. So the market's telling us that we're worth less. That's not about the price. This is not a bad price in Aussie dollar terms. Our assets are still economic. It's most definitely about sentiment, and that sentiment will turn. Obviously, again, elephant in the room with the news last night from BHP. Potentially, I think they've impaired their entire Nickel West business and considering potentially putting it all on care and maintenance. They are just putting it on care and maintenance. I find it hard to believe they'll have shut the entire integrated nickel business. Kambalda concentrator has been shut before. As I said, Kambalda produces a premium concentrate, has excellent metallurgical benefits. There's a shortage of good quality nickel concentrate for nickel smelters around the world. It is a highly sought after product. But at the end of the day, if BHP shuts the whole thing down and they're not using that Kambalda concentrator, for example, between ourselves and Wyloo, between us, we've got like 300,000 tons of nickel metal in the ground at 3%. That's way more than WMC had when it justified building the concentrator and the smelter in the first place back in the 1960s. So there's a lot of high-grade metal in the ground. It is economic at the current nickel price. It will be mined in the future. And if they don't want to use that concentrator, I'm sure with a quick chat with Luca, we could kind of step in and take it off them if they're not valuing it. So Kambalda produces a premium concentrate. That's a great aspect of Kambalda. It has this amazing discovery record. When the mines were sold in the late 90s, early 2000s to Mincor, Panoramic, Peter mentioned he was in nickel before, and with Lanfranchi and Mincor, those 3 junior miners as they were, went on to find 440,000 tons of nickel metal after WMC sold those assets. That's because Kambalda has this amazing nickel endowment. Our 4 mines were already shut and had been shut for between 10 and 15 years before that exit by WMC. They got sold with the gold to Goldfields of South Africa. That's how they've ended up inside Lunnon Metals. They produced 250,000 nickel tons while they were operational, but they didn't see the last boom. They were sitting dormant inside Goldfields until we extricated them from Goldfields. So they haven't had the opportunity to have that second bigger bubble. There's no geological reason why we shouldn't have the same record as those 3 junior companies. And we think the discovery of Baker is testament to that. So we're going to zoom in on our southern project, which is on the south side of Lake Lefroy, the Foster Baker project. That's the project we listed on. I'm going to zoom in and look at Baker and Foster in a little bit more detail. So this area now has grown from 39,000 nickel tons when we listed to over 90,000 nickel tons at 3%. That's a significant endowment of nickel metal in the ground. Baker itself, on the right-hand side of this image, is a 3-dimensional image of the famous Kambalda contact between the basalt and the Camartite. Baker area is now 1 million tons at 3.3%. That was a brand new discovery by Lunnon Metals. And the square box at Baker is the area, a very small subset of our overall resource where we did our PFS in May last year. I'll touch on those economics and just how robust Baker is as a high-grade deposit. Over on the west side of that belt, we've got Foster. Foster is now 57,000 nickel tons. That's all accessible from the historical Foster decline, which is currently flooded. But in parallel to being really aggressive with our drilling, we've permitted and de-risked the assets in the Foster-Baker Belt very methodically. We're very proud of the geotechnical work, the metallurgical work, the mine design work that we've done. When we start Baker in the future, it will be without doubt probably the best studied, the best drilled ore body pre-development in Kambalda's history, bar none, daylight second. PFS is on foot for Foster to combine it with Baker, and I'll talk about that in a moment. We're going to zoom in now on that Baker deposit in the right-hand corner and look at that black box, the box that we studied in the May 2023 PFS. So look, this is a plan view of Baker. As I said, we've been pretty aggressive. We've drilled 25 kilometres of drilling into Baker, not because we think we're smart, it's because it's shallow. It's only 200 metres below surface. It's extremely close to an existing gold open pit, which is why the pre-production capital is so low to access Baker. Those red and green circles are the pierce points through the Baker deposit. That's all the drilling. They've been blown out to 20-metre diameter. Red is indicated, green is inferred. So where those red dots touch, that ore body's been drilled by 20 by 20 metre spacing. Where they overlap and merge, it's actually down to 20 by 10 and 10 by 10 metre spacing. And as you can see on the three-dimensional image, it's been drilled like a pincushion. This is a really well understood, really well modelled, really well studied deposit. And we're really proud of how well we've de-risked Baker. It stands the company and the shareholders in excellent stead when this market turns. Unfortunately, we've drilled that out. We hope to get the resource upgraded to measured, given that drill density. This is a west-east section looking north. Unfortunately, we put these results out a couple of weeks ago on a very bad news day, probably similar to today, when Wyloo announced the pausing of their nickel operations, and BHP then followed up and announced the cessation of the concentrator in May or June. Some pretty impressive grades there. I've put them in bold on the right-hand side so you can see them. I think we went down on average by the same percentage as the nickel grade of those drill holes. So they're about 5–10%. I think we went down 5–10% on the day. But as you can see, extremely well drilled. You can see we focused our drilling in an extremely high-grade area. It's really important to understand that that metal is accessed very early in the mine life of Baker, and there'll be some spectacular jumbo headings when we get into that material. And as you can see, 12 metres at 7%, 6.3 at 7.8. We drilled 43 holes. 40 out of the 43 holes had greater than 1% intercepts. So I mentioned the PFS we did in May last year. Obviously, the PFS was done at a much higher nickel price. It was approximately $35,000 Aussie a tonne. We're sitting around $25,000 a tonne currently. As I said earlier, that's not a bad Aussie price. For those who've been in the nickel business for a long time, they'll have seen a lot lower prices than that. And one of the reasons Kambalda has operated, as Chrissy said, for 58 years pretty continuously is because it is high grade. So those high grades, that premium concentrate, generate really robust economics. So even at today's nickel price, roughly about a third lower than it was in May, removes about $100 million from that NPV tax, pre-tax NPV of $164 million, drops to about $60 to $65 million. That's not bad for 24,000 nickel tonnes. It's only a quarter of our portfolio. And that's at today's nickel price that everyone keeps telling you it's doom and gloom, we've got to shut, we can't afford to run. Baker is still economic. And we're going to finish the Foster PFS, combine it with Baker, and we'd expect, even at today's nickel prices, to have some pretty impressive economics come back from that. Baker is open. Peter just mentioned open arrows everywhere. We've been quite clear about communicating that we wouldn't keep drilling these ore bodies down plunge. We'll do that when we get underground, both at Baker and Foster. So there's a natural hiatus in our drilling program at Foster Baker. So that's one end of the exploration spectrum. A really well understood, really well drilled ore body that's robust even at the current nickel price. At the much earlier stage, almost a greenfield stage, this is our northern project. It's hard up against the Kambalda Dome. There's 340,000 tonnes of nickel metal being mined from the mines immediately adjacent to that green polygon. It's what we call Long South Gap. Unbelievably, there's not a single drill hole within that 6 square kilometres that's actually pierced that Kambalda contact I told you about. We've done 2D seismic. We've got some great targets. We tried to drill them. We had some drilling difficulties. We hit a big gold structure that was unknown. It was about a 50-metre wide quartz breccia. It's certainly the biggest quartz structure I've seen in my 30-odd years in Kambalda. Now, we don't have the gold rights here, but those gold structures post-date nickel, so it's important to understand them. 3D seismic has been done. We've spent the money to do that, and that will be delivering a portfolio, we hope, and we expect, of really high-quality targets. Obviously, in this market with this sentiment, we'll look at those targets, we'll work out which ones we do, probably pick the shallower ones, no surprise, but they will be a big part of our future and ongoing discovery program. And then lastly, look just to really separate us from our peers and to make you realise that Kambalda isn't all just about nickel. In its own right, the Kambalda St Ives field is one of Australia's great gold camps. If the assets were in an Australian-listed gold company, you'd hear a lot more about the discovery success at St Ives. But since they bought the asset in 2001, Goldfields, our major shareholder, has really ramped up exploration. And they have turned it into a world-class asset. 15 million ounces have now been produced at St Ives. And our Foster Baker project, which is the project we listed on, sits between two of the great gold camps at St Ives. The Victory Defiance camp, where I first went underground in 1987 when I got off the boat from England, is over 3.5 million ounces of past gold production. To our immediate south, the Argo, Apollo, Hamlet, Athena area is also over 3.5 million ounces. Both of those camps sit within a few hundred metres of our tenement boundary. The Foster block was actually historically explored by WMC as a nickel belt with not a strong focus on gold. You're looking at max gold in whole. The bright colours, the reds and the magentas, are over 2 grams and 5 grams in the bedrock. So there's a lot of gold anomalism. It's always been a bit of a mystery why there isn't more gold at Foster. As I said, we've got a natural hiatus in our drill program for nickel at Foster until we get underground. So we've taken the opportunity with the sentiment in nickel to switch to a little bit of a focus on gold. We've got some very high priority, quite exciting gold projects. Watch the news flow in the coming months as those results come to hand. So we think that sets us apart. It's not all about nickel, but our assets in nickel are still economic. Kambalda is one of the most resilient camps, a resilient town. It's ridden the cycle of nickel many times, turned itself into one of Australia's best gold camps, and we're blessed to have assets in that location. Kambalda, as Chrissy said, like myself, is 58 years. I think we're both going strong. There's plenty to still like about Kambalda. And if you're interested in that opportunity and you like what you've seen, please come and see us at booth 120. Otherwise, please enjoy the rest of the conference. Thank you for your time.
Well done. Thank you very much, Edmund. All right, coming up on stage next. There's nothing, I love this saying, a magmatic sulfide corridor. There's nothing like a good magmatic sulfide corridor, especially when you've got rare earths, you've got nickel, you've got copper, maybe a little bit of sand obscuring it, but these guys think so. They roll up the fluorescent orange sleeves and they've got the team that can get into it. This happy man is Greg Miles. He is the Managing Director of Caspin Resources. Please make him very welcome.
Thank you, Chrissy, and good afternoon, everyone. Thanks for coming along and hearing the Caspin Resources story. So Caspin, a bit of an introduction. We are an exploration company, two projects at the grassroots stages of exploration in what we consider to be very strategic areas. Our Yarrawinda Brook project, our Mount Squires project in sort of frontier regions of Western Australia. I would describe us as an active company. We're always out there having a crack, even in what we consider to be down markets. We always need to be offering our shareholders a chance for discovery, because no matter the state of the market, discovery is the real value driver to create shareholder wealth in our industry. And there have been plenty of case histories of companies with discoveries in down markets that have gone on to produce fantastic shareholder wealth. I would describe us as diligent. We pride ourselves on good geoscience. Last year, 2023, was quite an active year for us. We spent 80% of our spend went into the ground, as we say, or on direct exploration costs. And since we've listed, we've had over $500,000 worth of EIS or WA government contributions towards our exploration. And that is going towards essentially critical battery metals, which is really our core focus. Bit of a corporate overview. This slide hasn't changed too much except in the last sort of 6 months. We've got a bit more of a more streamlined board, But most of our major shareholders are still there. A shout out to Chalice Mines, who are a great supporter of ours, and Tinci Limited, a Shenzhen chemical company. They sort of specialise in battery chemicals, battery precursor chemicals, Shenzhen listed, and another great supporter. I guess what has changed over the last 12 months is obviously our value proposition. And so we'll talk about both projects. Both kind of have an equal billing within the portfolio, within the company. Our Mount Squires project out in the frontiers of the West Musgrave, primarily a nickel and copper project, but there's also fantastic opportunities for other commodities out there as well. And of course the Yarrawinda Brook project just up the road from us here in Perth, only an hour or two's drive. So we'll talk about Yarrawinda first, primarily because this is where our exploration today is focused on. It's impossible for me to talk about Yarrawinda without having that context of Chalice. Now, hopefully some of you saw Alex's presentation on Wednesday. A fantastic discovery. I know the gloss has probably come off a little bit in the last few months, but that is a fantastic discovery, and we are unashamedly looking for something exactly the same. I would love to give our shareholders the chance to enjoy that sort of success, which produces, multiples of returns on where our current value proposition sits. We have changed focus a little bit in terms of what we're exploring for, and we'll get into that in a second. And we're also keeping in mind open on the lithium potential in this part of the world as well. So that new target is really our Braska prospect. And it is essentially a lookalike target on the Gonneville deposit. The 2023 was really focused on the Yarrabrook Hill and Serradella prospects, sort of in the central part of the project area. And the reality with being a small company is you can't do everything all at once, and we put all our effort into that prospect. And some of the more obvious or other potential prospective areas were put onto to the back burner. One of those was Braska. Our geological team have done a great job in working up this target. It's very much the same geological setting as Gonneville, but bearing in mind that it's a mirror image, if you like, or a reflection of the Gonneville setting. But essentially the Braska has this nice intrusive geology structure, architectural structure, in roughly the same sort of position as where Gonneville sits. And as you can see on the right-hand side, it is the same stratigraphic belt of mafic and ultramafic rocks that stretches up 40 kilometres away from Gonneville. Now, the benefit of this project is we have had some previous exploration over this target. That initial exploration actually goes back to the 80s, where there's a bit of patchwork quilt of previous RAB drilling, so very shallow drilling, just drilling through the weathered zone. That did provide some indications of mineralised systems, both PGEs, nickel and copper. Our team has been out on the ground and mapped, done soil sampling, field reconnaissance, and confirmed that those mafic and ultramafic rocks that we want are actually on the ground. Back in 2020, we flew this area with airborne EM, which is a great first pass tool for doing a quick reconnaissance of an area for a conductor. But unfortunately, the penetration of those airborne EM systems is quite shallow, probably only, in this part of the world, probably only about 100 metres. Nevertheless, that did develop a number of conductors, and more recently we've reprocessed that, pushed the data harder, and generated another 11 conductors that warrant further investigation. And that's really been the motivation for getting on the ground today, as we speak, and doing a ground EM survey, moving loop survey using high-powered squid technology to see if we can penetrate that further. And what we're really looking for is massive sulphide. The key to Yarrawinda Brook, and in fact the key to the region, if you remember, Alex spoke about high grading the Gonneville resource, but high grade being the key. And so we are looking for higher grade mineralisation, which generally speaking means you're looking for massive sulphide. and EM techniques, electromagnetic techniques, are the tool to use to go and find those type of ore bodies. Guys have been out there. There's a photo of the crew, Gem Geophysics, shout out to them, doing work on the ground, looking for those sort of conductors right now, and that program will run for another week or so. Now, it's not just, there's a suite of different prospects still in the project area. As I said, most of our work last year focused on Yarrabrook Hill and Serradella. I guess that exploration was pointing us further down dip. Now, I'll concede it's not really the market to go drilling deep holes. So our exploration strategies has switched more to looking for near-surface opportunities. And there are still near-surface opportunities at Serradella. There are some EM conductors close to surface where mineralisation is along strike. We got some fantastic grades at Serradella last year and a sort of a relatively narrow, higher grade lode, reasonably low, shallow, but still open. And so that remains an interesting target for us when the time is right. But we've also done soil geochemistry beyond that, and we're developing another interesting target at the Balansa prospect further to the north as well. So many targets still to be explored here at Yarrawinda. It's probably another 30% of the project that hasn't had any exploration done on it at all, and a lot of that's got to do with the competing land use with agriculture. So it's only in recent times that people have been willing to cooperate with farmers and get on the ground and work with them and explore this kind of terrain. And along the way, you do get surprises. And so lithium, look, some people would probably say we're a bit late to the party. I would say actually we're a little bit early, because this is something, what we're looking for is not the same, it's not your Pilbara pegmatite lithium sort of thing. What we're looking for is the Greenbushes style of model. Now, Greenbushes is the granddaddy of lithium deposits sitting down in the southwest. There's only one. It seems it's so unlikely that there's only one of Greenbushes style deposit in the southwest. And the beauty of what we've done so far is that our exploration can be tailored or looked through a different lens to a lithium sort of perspective. And sure enough, the pathfinders to lithium are all there. So essentially, tin, tantalum, cesium, tungsten, these are all pathfinders. You don't necessarily go looking for lithium directly, because lithium, highly mobile in a strongly weathered environment, it leaches quite readily. If you want an example of this, Atlantic Lithium in Ghana had a very similar sort of situation. Their initial surface samples were pretty modest, only hundreds of ppm. It wasn't until they got beneath the weathering zone where they started seeing the 1% type grades in their lithium. And sure enough, guys out there mapping these systems have found pegmatitic looking kind of rocks that are anomalous in lithium, actually, interestingly, just outside of what appears to be the sort of main core area. What we want to focus on is where those important structures, also the structures that can drive magmatic intrusive emplacement, where they cut suitable host rocks, metasediments, is the place to go looking for lithium. So we'll continue to keep an open mind to this. We'll chip away at it. It's a bit of a slow burn. SQM are in the neighbourhood with a joint venture partner just across the border. They're looking to drill some targets shortly. So we'll be monitoring this, and it's another potential value add for our company. And so on to the Mount Squires project. Very different terrain, obviously, but still the same sort of strategy. Looking for nickel copper systems predominantly out in the West Musgrave region, but keeping an open mind as to what else you might find when you go out exploring in this part of the world. I guess it is a difficult part of the world to explore. Some people are put off by the remoteness. We've definitely got a competitive advantage in dealing in these type of regions. The Nunda people are a great Indigenous group to work with. We've enjoyed working with them. And as you can see, we haven't been impeded at all. We've been able to get on the ground and do some really interesting work. We found an interesting rare earth discovery, which we'll talk about, and there's also some gold kicking around out there as well. But the Nebo Babel sort of look-alike is what we're looking for here. And, you know, as Ed sort of, you know, it's an interesting time in nickel. The announcement by BHP last night about their nickel business is kind of interesting. It doesn't faze me at all. Nebo Babel isn't going away. It was found back in early 2000, so it's been 20 years in the making so far. I think when that mine is built, it'll actually be right down the low end of the cost curve. So I think it'll kind of survive these sort of nickel downturns. And in fact, you know, if we were to digress a little bit, the real way to overcome Indonesian nickel is actually to go and find new deposits. Cheaper, near surface, you know, where you're not looking for nickel at 1,500, 1,800 metres below surface, and then extracting that with new modern technologies. So exploring out the frontiers for nickel and, you know, admittedly polymetallic systems, copper and PGEs is really the way to go. And so we're out there, we're doing that work. Along the way, we have happened to come across an interesting rare earth discovery that we call Duchess. You know, we kind of jagged it a little bit, but what's really interesting is it's the only style of this mineralisation in Australia. We call it a hydrothermal volcanic system. So it's structurally controlled, massive hydrothermal system that is upgrading an already elevated rare earth rhyolite rock, a felsic rock, and then concentrating it into these narrow veins. Now that's open in every direction. And importantly, it's got heavy rare earths, and that's the important part in the rare earth story. Everybody's got NdPr, not everybody's got dysprosium and terbium, and that's where the real value is. It's much more valuable than the NdPr. So we're investigating, we're doing some early stage site metallurgical work. We would look to do either a chemical or a mineral concentrate, and that work is ongoing, but it will be all about, can you recover the heavy rare earths? That's the point of difference. So Mount Squires is more of a wintertime kind of program for us. Yarrawinda at the moment, but then we'll pivot into Mount Squires and continue that search for the next Nebo Babel. Fantastic polymetallic systems. Keep an eye on the rare earths. That metallurgical test work could really open up this area for extraction, and then keep also an open mind onto that gold systems. It's really a bit of a unique kind of setting for gold mineralisation, but another fantastic opportunity for us. You think that'll be enough? All right, ladies and gentlemen, there's so much to talk about. I could talk about here for another half an hour, but I'm going to get yanked. Come see us outside. Thank you.
Good on you, Gregory. Get up there. Get off my stage. Now, the reason I can't talk when they're up there is the ASX gets really cross at me and we have to edit out my voice. So instead, I just threaten them with non-verbal cues. All right, now this fellow here, actually, there's a fellow sitting at a home today. You'd have on your programs there, and I know we've had to make a few changes over the days, but you would have Rob Watkins down as your presenter. But Rob, you're at home at the moment, aren't you, sipping on a latte? Because Rob he actually came down with COVID. So instead, for one day only, one appearance only here at Explorers, could you drop the microphone down for me? Would that be right? We have got Exploration Manager Paul Tan. And I know, I have it on good authority, Exploration Manager Paul Tan, that as a rock licker, a serious rock licker, you'd much rather be out there making the next big copper gold discovery for us. So this isn't his preferred place to be, so I've been told to be very kind to him. I'd like you to be as well. Would you please welcome the Exploration Manager Paul Tan to us?
Thank you, Christy. Yeah, unfortunately Rob couldn't make it, but he does send his apologies. I'll be presenting the Carnaby story today and talking about unlocking a significant Australian copper gold discovery. Oops. Here we go, just some disclaimers. Okay, so a little bit on our corporate overview. So Carnaby has 162 million shares on issue. We have a market cap of 93 million And more importantly, we have a cash available at 18.4 million. So well funded to continue exploration. And as you'll see further in the presentation, definitely a company to look into. Okay, so where are we? So our key project at the moment is Greater Duchess Gold Copper Project. It's located in the Mount Isa Inlier. So that covers 1,921 square kilometres. We also have a couple of projects in WA, one in the Pilbara in the Molina Basin, which is a gold and lithium project, and also on the North Yilgarn margin, the Malmac copper and lithium project. So the Greater Duchess project, it's situated in a Tier 1 base metal district, preparing for a copper-driven revival. So the Greater Duchess Gold Project, it's located in a world-class mineral field. Our tenements are centred around the town of Duchess. So we're located about 70 kilometres from Mount Isa. It was surrounded by numerous mines and processing facilities. Of note, some major deposits such as Mount Isa, Ernest Henry and Selwyn. We have 100% ownership of our Mount Hope lease and plus 776 square kilometres of new tenure down the interpreted Nildes-Brandham IOCG corridor. In addition, we have 82.5% ownership in 307 square kilometres of existing tenure, which includes our Nildes-Brandham discovery, and have also entered in a farm-in joint venture with Rio Tinto Exploration, looking to search for copper gold mineralisation in the Wimberoo granite at the Devoncourt project. So looking at the Greater Duchess Copper Gold Project, we're in a highly prospective iron oxide copper gold corridor. Within the last 2 years, we've had 3 major discoveries, these being initially Nildes-Brandham in late 2021, followed by the Lady Fanny in early 2022, and then finally Mount Hope in late 2022. And more recently, we discovered a brand new lode associated with this deposit called the Chalcas lode, and that was only in March last year. So we have a strong pipeline of new targets that we're looking to get in and explore. And as I've said before, we're well funded to do that exploration. So in October, we put out our interim maiden mineral resource estimate for the Greater Duchess Copper Gold Project. So in total, we have 21 million tonnes at 1.3% copper, 0.2 grams per tonne of gold, and with 1.4% equivalent copper. Our main flagship deposit is Mount Hope. So this has 10.3 million tonnes at 1.7% copper equivalent, and followed by with Nildes-Brandham and Lady Fanny deposits. So each one of these deposits are IOCG, different styles, which I'll go into a little bit later. However, all deposits are open at depth and have potential to grow with further drilling. Of particular note is the Mount Hope recent results. So we've had 3 holes drilled outside the resource, and one of those went 87 metres down hole at 2.3% copper and 0.5 grams per tonne of gold. In the Greater Duchess Copper Gold Project, we've in the process of doing a scoping study, and this is progressing quite well at the moment. We're looking at all different avenues of future scenarios, standalone development through to toll treating, using third party as a low cap startup, assessing road and rail options. Of particular note is our open pit and underground studies, which are actually quite advanced at this stage. And we're looking to sort of complete a scoping study in Q1 this year, and this will almost certainly flow into a pre-feasibility study after that. So just a quick slide on metallurgical results. In summary, very, very high recoveries at a coarse grind as well, I might add, with no deleterious elements in the concentrate and a good correlation between copper and gold recoveries. So you can see there Mount Hope between 97.5 to 99.3% recoveries in the fresh ore. So now I'll just talk about Mount Hope quickly. So Mount Hope, it's quite, it still has potential to look for new styles of mineralisation. New bodies of mineralisation. Recently we've flown a detailed drone magnetic survey over this, and this has really highlighted the magnetic high anomaly which sits in the footwall of the Mount Hope Central Lode, and basically sort of follows around that contact. It's really bringing up some new targets for us to go in and have a look at drilling. We've also done a fair bit of IP and downhole EM geophysics in the area, and that's actually some of the mineralisation there is proving to be extremely a good method to discover this mineralisation. So just go on to Mount Hope. So now we're looking at the Mount Hope Central Lode. Essentially, we have two big quartz veins there sitting in echelon to one another with a folded geometry. You can see here the top vein there is basically our Boomerang deposit, which was mined back in the late 60s, early 70s, and that material was sent to Mount Isa as flux for their smelter, which is getting copper credits. And below that is the Chalcas Lode, which is a new body of mineralisation that we drilled early last year. So these deposits are open at depth, and we're continuing to sort of map out the extents of these bodies. So looking at the Chalcas Lode, this is an exceptional deposit. A discovery hole, 36 metres at 4.2% copper and 0.5 gram of gold. The three holes you can see on the left there are the new holes that we've drilled outside of the MRE, with a recent result of 71 metres at 1.6% copper and 0.5 grams per tonne of gold. And in that bottom slide, that's just a picture of the copper mineralisation, so you can quite clearly see the chalcopyrite, which is actually filling in a breccia within the quartz vein. Main thing to note with this deposit is it's got quite a consistent width of 20 to 30 metres. It's mineralised across that entire width, and we're looking at strike extents of 200 to 300 metres with a downhole down dip extent of 500 metres. So next, talk about Lady Fanny quickly. So Lady Fanny is on located 10 kilometres to the south of south of Mount Hope, and that's had some early historical mining. We've done some IP to the north of that. You can see the main north plunging high-grade mineralisation. This was basically just discovered by drilling under an old pit, which is just mined to 13 metres. So there's plenty of scope to actually extend that mineralisation down. And we're planning on drilling some of these IP targets that we've identified. Nildesperandum. So Nildesperandum was discovered again using IP. Our discovery hole of 41 metres at 4.1% was actually on the fourth IP line that we put down. We just basically drilled right into the middle of it and hit the high-grade breccia core. So this is open at depth, and we intend to run downhole EM on some of the deeper holes, as it's very pyrrhotite rich. It should light up quite well with the downhole EM. I'll quickly talk about Duchess. So we've just, as part of our MRE, we've done a resource on the Ivanhoe Lode, which is located to the west of the main Duchess deposit. So Duchess had a historical production of 205,000 tonnes at 12.5%. We recently put a hole down under the Central Lode, which sits between the Ivanhoe and the Duchess Lode, and had an intersection there of 10 metres at 3.3% copper and 0.1 grams per tonne of gold. So it's one of the best intersections we've had in Duchess. It's had very minimal drilling there, probably 6 holes across that structure, and we're going to do some more drilling there. We've got a rig about to start in a few weeks. So just talking about Rio Tinto joint venture. So we're basically looking at doing, following up on the work they did. They basically were drilling a magnetic gravity constant high on the Wimburu granite, and have identified brecciation and IOCG alteration and mineralisation. Although today we're still yet to find the high-grade structures which might be feeding that alteration system. Most of the holes there, extremely broad spacing. We're talking about 1K by 300 metre spacing. And we've had a look at the geology and assessed it, and basically have identified some potential structures there which are steep. And given the broad spacing, it's quite highly likely we've actually missed the high-grade mineralisation. So hole 1, which is, let's get the laser pointer. This one here. That one actually hit some mineralisation at the end of the hole, 0.5 metres at 0.14% copper. And we're basically looking at extending all these holes with additional 300 metres with diamond drilling tails. We're going to drill all 7 holes and actually try to cross these structures with angled holes rather than vertical holes to get a better idea. So just a quick one on huge exploration upside at Greater Duchess. We've picked up a 75 kilometre extent of new tenure down the Nildesbrandum IOCG corridor. And this has been flown with 19,000 line kilometres of aeromag and radiometrics on a 50-metre line spacing. So we've just done a detailed assessment of that for targeting, and we'll be looking at doing some first pass reconnaissance exploration of that southern area. Well, in addition to this, we still have our older tenure, which is our 82.5% JV with Discovex. We're looking to still continue exploring these areas for potential mineralisation. We've demonstrated that by doing our drilling at Mount Hope and at Lady Fanny, that there is still mineralisation to be found under these old, particularly discarded old forgotten mining leases. So at WA, just quickly, we look on this slide, we're looking at the Molina Basin in the Pilbara. Our tenements are located to 70 k's to the northeast of the De Grey Hemi deposit. Our style of mineralisation that we've seen at Strelly is quite similar to Hemi. And we're going to do some more drilling at Pardue and at Mount Grant, where we've got EIS funding, and look for some really interesting mag targets underneath cover, which has never been explored before. Just a quick slide on Malmac. So Malmac is on the north margin of the Yilgarn Craton. We've done quite a few field seasons of reconnaissance soil sampling and mapping, have identified some big copper anomalies, and even rock chip PXRF up to 1.2% from outcrop in the field. This is a complete greenfields area. We've also identified a fairly large lithium anomaly. We've got to go down and do some more follow-up work on that to see what might be causing that. But again, another area that we'll be looking at doing some more exploration in. So just in closing, Carnaby Resources, we've had 3 major copper discoveries in the last 2 years. We've got an MRE out of 315,000 tonnes of copper equivalent. Major exploration due to start up in 2024. And yeah, we're going well, and please come and ask me for some more information at our booth. Thank you very much.
Well done. That was not hard, Mr. Exploration Manager, was it? No. Are you coming back again next year? No. You're coming back? No, I'm not. All right. Here, let me take you on a little story. In a small clearing in a thick forest in the north of Sweden at the end of last year happened the turning of soil to build Europe's first plant to produce active anode material for lithium-ion batteries. You thought it was going to be a little folk story, but it wasn't. This is the start of a really big story, isn't it? And this very big man who's going to tell it to you all is Talga's MD, Mark Thompson. He's going to fill us in on what's been happening during 2023 and what that means for you as potential investors in 2024. Please make him very welcome.
Thanks, Chrissy. Thanks, everyone, and hello. I founded Talga in 2010, and in 2011 searched the world for a graphite deposit. We at the time were a gold explorer, so I got out of yellow stuff into black stuff. Why would I do that? Well, it's quite simple in a way. you could see the growth in electric vehicles driving new demand for batteries. Now, this is a mega trend that will continue for a long time. It's early days yet, but the fundamentals of it are true. Now, recently, there's been a lot of media hype about EV sales are flattening out and EV sales are declining. They're still growing, as you can see, a 38% year-on-year growth. The new numbers for January are even higher in most markets. The point is, how many other things in your world today, filled with low GDPs, with recessionary talk, with higher interest rates, what else is growing? There's not a lot that's growing, is there? Everything's bumping along the bottom, so don't worry about EVs being a problem. That's the last of your problems. That green transition is continuing, and it's being supported by government. So why did we choose to go into graphite? Because it's the largest volume part of the battery. It's far and away the largest single mineral in a battery, and the supply chain of it has got real problems. Number one being that it's the dirtiest part of the battery. So the highest amount of emissions, including the assembly of the battery cell itself, comes from graphite. It's not from lithium, it's not from nickel processing, it's not from the production of the battery itself, it's from graphite. So you could sort of see that this is a problem going forward, or an area for a lot of improvement. Secondly, it's the most concentrated part of the supply chain in China. So it's the most asymmetric supply chain of all of the parts of the battery. There is far more diversity across other parts. So you've got nearly 99% of natural graphite in a batteries goes through China. Doesn't matter if it's mined in Africa or Australia or Brazil or India, it ends up in China for purification and shaping, and then maybe goes back down to Korea or Japan for coating. So the supply chain's extremely focused there. And so that becomes an issue when, as the Chinese did just last month, or sorry, it's February now, sorry, but in December, they announced new regulations for export permits from China on battery grade graphite. So what that means is that all the companies have to apply for permits, and you've seen a plus 90% drop in graphite exports from August, September through to December. So the supply chain's extremely weak. So what are we going to do about it? Well, that's why we've got into the graphite fundamentally, and that's why we're building this project. It's the world's greatest graphite deposit, in my opinion. It's in North Sweden, and we've developed a project that takes it from the mining, the processing, all the way through to making the coated anode active material that we sell directly to battery makers. So it's a one-stop shop. So in reality, it's a battery material technology company that happens to own its own mine, not the other way around. It's all powered by hydro and sustainable power. It's some of the cleanest, not only in the world, but it's low cost as well, super low cost. And so that gives you a very clean bill of health. And we've actually already been making anodes for the battery for the last 2 years. So we make the fully coated material in our electric vehicle anode plant here in Sweden. And this gives us the ability to have our people trained up, ready for commercial development. So this is no pipe dream, folks. We've already been mining our own material on a trial basis, purifying it and coating it, and it goes out to customers. And this is what you need for the automotive industry. This is not a bulk mineral. It's not a commodity. It's actually a specialized chemical, and it needs qualifying with different groups. They've got to see that you're using equipment like you're going to use in commercial production, and this is needed to qualify the material for offtakes. The resource itself is the highest grade and largest in Europe, and yet we've only scratched the surface on it. It remains a lot larger. We haven't closed it off yet. And importantly, the flake size is all battery size. So this doesn't produce a little bit of stuff good for batteries and industrial minerals on the side. It's 100% anode material. In fact, this deposit provides more anode per tonne of resource than any other we know. And that's the important thing. If you're talking about natural graphite for batteries, you want what goes into electric vehicles, don't you? You don't really care about the industrial market so much unless it makes you a ton of money. The problem is the more you produce, those industrial markets are not growing, so you flatten the price. It's only the battery market that's growing, not the industrials. This deposit is 100% battery material. So we're located in North Sweden, which, as we've said, is a pretty good place to operate. It's combined, it's a mine with a concentrator being built up near Vittangi, and down in Luleå, there's an anode refinery to be built, which is where you do the purification and the coating, and you can ship out on the Baltic if you want, but we've got direct road and rail access into the rest of Europe. So you don't have to ship, we can drive our material within 24 to 48 hours directly into French or German battery makers. We've also got a scoping study to expand this project up to 100,000 tonnes of production. Current production that we're building is about just under 20,000 tonnes of anode. So that's a very reasonable size, about 16 gigawatt hours of batteries. The product we make is a super premium product. It's not only super clean and with excellent ESG credentials, it also has fantastic performance. It increases charge rates and it also increases the temperature range that your battery can operate well at. So this solves problems. And this is what the factory looks like that we'll be building. This refinery site is fully permitted. We've actually done first site clearing on it now, so it's construction ready. It's fully ready to go. Just to give you an idea of how much cleaner this material is, it's 92% cleaner than the material that's currently in your phone and in your laptop and in your car now. If you have an electric vehicle, you're currently using mostly synthetic graphite made in China. It's an extremely long, dirty supply chain. Never mind the fact that it's fossil fuel. It's coal or oil that's been converted into graphite using vast quantities of energy. It's dirty, and you're driving around literally with half of the volume of your battery in your electric car is made of fossil fuels. Makes sense? Not to us. So therefore, we propose using this natural product, which does the job just as well, but it's super clean and has a lot of other benefits as well. A big driver coming up. So you might say, Mark, love the environment, love the ESG stuff, love the CO2, but frankly, no one seems to be making purchasing decisions on it. It doesn't necessarily matter going forward because they're regulating the heck out of it. Some of you are old enough to remember when engines used to be a lot dirtier than they are now. They introduced tailpipe emissions, and by they, I mean the regulatory groups, first in California and America, and then also in Europe. So the large companies, like for a few years ago, Chrysler and Fiat, they were paying billions of dollars per year in fines to the government or to electric vehicle companies because they couldn't get their fleets to come down to the targeted tailpipe emissions of CO2. Guess what? It's happening in batteries as well. So there's battery passport legislation coming out that goes into effect next year on European manufacturers. And by 28, it actually stipulates the CO2 numbers of their products. So it's underway where they have to get cleaner materials. The point being that it's not just a market-driven, it's not a market-driven for the low CO2 or a new cleaner supply chain. It's not up to you guys who consume vehicles whether you want to choose to pay a bit more for one or not. It's being driven by government. These are the regulatory tailwinds, okay? One of many. So where are we at? How are we going to pay for this? Well, under the DFS a few years ago, the project costs about 550 million with our contingencies in US. We're targeting 60% of that in debt, which would mean about between 300 and 400 million US or euros. We have finalised that now with a consortium of leading banks led by the European Investment Bank, which is a fantastic partner to have in Europe, super high standards. And the fact that they're financing this project, which includes a mine, is very significant for the way Europe is taking the serious development of its critical raw materials going forward. We're also applying for state aid and grant funding, which you might have seen a lot of groups in the world get, and the balance of it will be equity, for which we're looking at strategic partners. So basically, that's mostly done, is the point. From an execution point of view, we have the permits for the mine are currently under appeal as part of a statutory process. We're waiting for some news any day from the Supreme Court on that in Sweden, which will convert the mining permits, give us the environmental permit, which was already granted, but the appeals against it will hopefully be rejected, and that will trigger a whole bunch of other things from offtakes to the financing to strategic investment will all come along. Worley and ABB and others are partners. We've raised over $30 million is in our environmental bond as well. Is all done. This site you can see in the background is our refinery site. Yes, we work through winter, even though it's rather cold up there in northern Sweden, but that's pretty normal. They're used to building things in all weather up there. The mines run all year round, and so do all the other businesses. So this site is now owned by Talga. It's in the environmental park in Luleå. We are still exploring. Thought we'd better throw a slide in for the RIU, the mighty RIU in the Explorers Conference. We've barely scratched the surface of our graphite deposits. They extend for 60 to nearly 100 kilometres through North Sweden. We own it all 100%. We've got multiple deposits up there to draw on. So scale is not an issue going forward. It's just, you just drill out whatever you need. We've also got an exciting lithium project. It's exciting insofar as that, like everyone else, it's a few rocks with lithium, nearly up to 2%. But importantly, we're the first mover up there. So that project is now 270 plus kilometres of scale with 50 kilometres of pegmatites. So it's the simple volume of it is one of the rare hard rock opportunities for lithium in Europe. Europe currently imports all of its lithium. So this is a real opportunity if this can be developed on, again, that fantastic low-cost, clean hydropower and world-class logistics in that area. It represents a great, dare I say it, a great white hope for Europe, pardon the pun on pegmatite rocks being white. And we also have some non-core projects as well. We own our own technology, both in processing and for the products. In fact, most of our work is on the downstream processing. We own all of our processing IP, the equipment we've borrowed from the pharmaceutical industry, food industry. This is new tech stuff. This is how we make it cleaner with higher yields at lower cost. Altogether, we can compete with China on cost, even though we're in Europe. This also provides us new materials and products that can come out into the market. We engage with industry, mostly under NDA, so there's a lot of things we can't talk to recently, an agreement with Polestar working on their net zero project, but we have a vast quantity, over 100 technical partners, from the commercial ones through to institutions, and we're moving into next generation products like silicon anodes, solid state anodes, additives for sodium-ion batteries. So no matter, come up to me at the booth later to have an argument about different battery technologies and what's really going on outside, again, what gets published in the media these days, and I'll straighten you out. But don't listen to just what I say. You just have to realise that we've got products for all of it anyway. So we're fully exposed to the growth. So just to round up, upcoming milestones. The environmental permit mines, or the decision for up on the mine site by the Supreme Court, is keenly awaited by shareholders and us. It is the last stage of the environmental permit process up on the mine. Down at the refinery, that's already all cleared, and we've already done site works down there, and they will continue as much as we can as part of the financing package being finished. So everything's all sort of coming together. The finance, the customers, the project is all coming together based around some of those, waiting on some of those permit decisions. And we also have quite advanced feasibility studies showing how exciting the silicon anode and other project is, so we can extract value elsewhere in the company with these other technologies. So currently Talga shareholders own it 100%, but there is, there's room to build value in parallel projects that, when we announce it, will include financing and partner solutions. And lastly, on the right there, just pointing out some local support. Thierry Breton, the Commissioner of the EU, this is actually a photograph from yesterday, as he was saying in public there, no graphite, no battery. The European Union takes its critical raw material position very seriously. They're very interested in the anode supply chain, and it's nearly 100% reliance on China. Both they and America have had discussions on how to make this better. So Talga is perfectly positioned to solve these issues. So there's a lot of tailwinds for us. So watch this space. Happy to join you at our booth afterwards for a chat. Thanks, Chrissy. Thanks, everyone.
Thanks, Mike. Thank you, Mike Thompson. You should bring some of those Swedish chocolates back with you next time, and you could use them to bribe me to get extra time. That's a good idea, isn't it? I like that. All right, IGO taken to the stage to round out session 2. And as they make their way up here, it's 39.8 degrees outside at the moment, team. So there's been a lot of news flow from the company of late. What has remained rock solid is their world-class asset base and their strategic decision to navigate this evolving market landscape. To talk us through the plans firsthand, would you please make welcome to the stage IGO's GM for Exploration, Dr. Suzanne Hunt.
Thank you. Good afternoon. Good afternoon, everyone, and I'm delighted to be here with you today at RIU to present updates from our exploration activities at IGO. I'll start with our cautionary statement and disclaimer information, followed by the competent person statement. At IGO, our strategy is aligned to our purpose, that of making a difference through being a globally relevant supplier of products which are critical to the clean energy transition, to generate a diverse suite of products made safely, ethically, reliably, and sustainably, and by being vertically integrated, linking upstream and downstream into the supply chain, by achieving net zero emissions across our business, and to have all of this delivered by a great team of people who are bold, passionate, fearless, and fun. We all strive to be smarter, kinder, and more innovative as a team. In terms of our operating assets, as many of you would know, we have Greenbushes, the world's lowest cost and highest grade hard rock lithium mine with a 20+ year mine life, where we also have exceptional brownfields growth opportunities, and Nova, a high quality, low cost nickel production asset with an enduring focus on operational excellence and also sustainability. But today, this presentation is mainly focused on our exploration activities, where hard work continues, which is aimed directly at unlocking new discoveries. Here we have three primary commodity pillars: nickel, focused across WA, the Northern Territory, and SA, on targeting large-scale magmatic and komatiitic sulfides. We're really looking for tier 1, tier 2 targets, as well as exceptional oxides in the Western Gawler. For copper, we are targeting sedimentary hosted systems, but are also keenly looking at IOCG opportunities. For lithium, hard rock spodumene is our focus. In terms of our strategy in exploration, our portfolio, or our advancing pipeline of projects and targets, is developed via a very robust value-based ranking scheme. But without the foundation of very good technical support and good relationships, this portfolio can't be developed and executed. Hence, we have a 5-pillar approach for planning our work, which includes the focus on our people, all our stakeholders, best practice in business execution, advancing technology, and applied research knowledge, all leading to this fully value-based ranking scheme for identification of the programs of work that will maximize value and provide the greatest chance of success. As you would know, we have a large portfolio and excellent target options, so a robust ranking scheme is really critical for prioritization of targets. In addition, we have good working relationships and engage extensively and collaboratively with our many respected joint venture partners. Okay, so through excellence in project ranking and portfolio optimization and management, we have had several developments this year. Firstly, successfully drilling and intersecting massive sulfides at Dogleg in the West Kimberley. Next, at Forestania, the intersection of spodumene-bearing pegmatites up to 34 meters in thickness. And finally, at Copper Wolf in Arizona, results from drilling by our partners Buxton Resources, indicating a large copper molybdenum system. For all these projects, we have programs for follow-up drilling planned, and we're very excited to get into the next phase of drilling on all of these projects. So I'm now going to quickly bring you through some snapshots from our current portfolio. First up is nickel. And I'll start with the Kimberley. So the Kimberley project spans across two highly prospective belt scale areas, referred to as East and West Kimberley, and both belts have proven magmatic sulfide mineralization. We consider these regions highly underexplored for nickel, both spatially and via the utilization of more modern exploration techniques. The Kimberley team within IGO have been focused on the acquisition of regional scale data sets to aid in reducing search space and generating our targets. A very key data set has been an extensive airborne EM survey, which then focuses our ground EM crews over the most prospective ground. Okay. Oh, sorry about that. Okay. We consider, sorry, could you just go down? Sorry about that. Okay, in the West Kimberley, the dog leg area was originally identified as an area of interest based on the interpretation of magnetic data, suggesting it being in an analogous position to the magnetic features that had previously been observed at Merlin. A moving loop EM geophysical survey was undertaken over the magnetic features at Dogleg in 2022. This identified a very large plate, a 12,000 Siemens conductor. On drilling this target, massive sulfides were reported at Dogleg with 6.57 meters of massive, greater than 80% sulfides intersected in the hole, within a 14.7 meter zone of mineralization from 176 meters depth. This sulfide mineralization is hosted in the ruins dolerite, which sits within a similar, very similar zone to that seen at Merlin. A similar package of quartz muscovite-bearing metasediments. Further work is planned for this upcoming season to test the extent of these intersections, and we are really looking forward to drilling some additional holes into this target. Okay, so moving on. Also, we're committed in the Albany Fraser to seeking additional ore sources proximal to Nova, and this is directed through both our greenfield and brownfield exploration programs. Known sulfide occurrences spread across this belt, demonstrating that mineralization here is not confined to a specific local geological setting. The spread indicates that the right plumbing exists to provide pathways for nickel-copper bearing magmas. And thus, there's a high probability of more Nova-style deposits undercover. The team is constantly adding to and reinterpreting its pipeline of targets based on learnings from Nova and Sylvanite, and exploration data is helping to unlock these discoveries. Next, let me cover our Forestania project, which includes the Spotted Quoll high-tenor nickel sulfide mine and Flying Fox, which recently ceased production after 20 years. A consolidated 900 square kilometre land package forms part of this project, which we consider to be highly prospective, both for resource upside potential, proximal to the mines, and for regional nickel and lithium targets elsewhere. So work at South Iron Cap continues, targeting the main lithium-bearing pegmatite zone. Drilling is designed to infill and increase geological confidence and to extend drilling coverage laterally and to the south of the main zone. Drilling will continue in the coming quarter to better understand geological control and test open positions. So next, moving on to Cosmos, brownfield exploration. So the Cosmos project is located 30 kilometres north of Leinster in one of Australia's premier nickel belts. Exploration here is focused on our brownfield programs. We consider there to be significant exploration upside along strike and at depth, and thus multiple resource extension opportunities are planned for testing. Also, shallow, low-grade targets are being assessed. And finally, for nickel, we have early-stage projects at belt-scale primary acquisition level, the Western Gawler project in SA, and the Raptor and Irandina projects in the Northern Territory. Each represent extensive belt-scale holdings, and they are considered highly prospective and underexplored for nickel and copper sulfides. In the Western Gawler, the potential for magmatic-hosted nickel-copper mineralization is known, but recent work at Mystic, which is a nickel oxide, suggests similar anomalies are present nearby, and 15 prospects are under review currently. The magnetic image here is a typical footprint of these oxide anomalies. As for Raptor and Irandina, they're both first mover opportunities. They are under assessment using airborne geophysical data. Recent surveys have identified 12 targets for follow-up ground EM work. And last, Bloodwood has recently been staked by IGO. This is in the Northern Territory and has been based on prior surface samples where heavy mineral anomalism has been detected, and we're very excited about this new ground. Okay, so now I'm going to move on to our copper projects. So first up is the Patterson. The Patterson project is focused on exploring for both sediment-hosted and intrusion-related copper-dominant deposits under relatively shallow cover. Historic exploration in the region was typically shallow, failing to penetrate cover, as I'm sure many of you know, and used primitive methods. The Patterson team have thus prioritized the acquisition of high-quality belt-scale data sets to map the region. This has included mag, gravity, EM, MT, IP, systematic soil sampling over shallow cover, and targeted air core programs where our cover is deepening. Outcrop mapping over hundreds of square kilometers has focused on sedimentology, sequence strat, and structural geology. And all this has been put together and integrated in generating 4-dimensional geological and structural models at both the belt and camp scale. So we've now moved to the target testing phases. So after building those models, we've got the targets identified, and early drilling has confirmed the accuracy of our models in terms of both the architecture of the basins and also honing in on where copper-bearing fluid flow has occurred. And some of our partners have put out releases on the results so far relating to those intercepts. Our target testing will continue in the. Up next is the Copper Coast in South Australia. This project is an early stage conceptual belt scale with landholding considered highly prospective for sediment-hosted deposits. Magnetics, gravity, MT, and also hydrogeochemical samples are being taken, as well as crop growth analysis studies underway. And we have now reduced this data, built the 4-dimensional models, and we've identified a number of highly prospective locations. You can see those locations on the map here. Okay, and moving on, I have to speed up a little bit as I'm running out of time, but also within our portfolio is the copper project managed by our joint venture partners, Basin Resources. Copper Wolf is a known copper molybdenum porphyry system. Recent assay results from the diamond hole have returned 400 meters at 0.7% copper equivalent from 600 meters depth, including 106 meters at 0.86 copper equivalent from 700 meters depth. We are very excited about this result and looking forward to the next phase of work at Copper Wolf. And of course, last but not least, an introduction to our emerging lithium portfolio. The Greenbushes Regional Project covers ground proximal to Greenbushes Mine, the world's largest operating hard rock lithium mine. The lithium team have scheduled early assessment ground activities to investigate the prospective stratigraphy. We have radiometric images from our joint venture partners Venus, and they show signatures associated with potassium-rich pegmatites. Soil sampling, ground gravity, and field mapping are planned for the coming season. Okay, and I have got a summary here, but I haven't got time to run through my summary. But thank you so much for listening to me this afternoon. And if any of you have any further questions, please come and see us at booth 127. So thank you so much for your time today.
Thank you very much, Doctor. Yes, all right. We have got a little break for half an hour or so. I will warn you, the mercury is now hit 40.7 degrees, 40.7 degrees. So if you're at home in your air conditioning, good on you. We're about to leave our very cold auditorium. So just be